What's up, everybody? Welcome to the Trade to Black podcast once again. We're kind of shifting gears today. I know normally we're talking about cannabis. This is the rare opportunity where I actually get to talk about my other passion, crypto. Diving into Bitcoin, the current framework around stablecoins, Bitcoin Treasury companies, and just the overarching crypto ecosystem as it's been today. Luckily, we get to talk to one of my favorite guests to have on the platform and an OMG in the space. Mark Yusko from Morgan Creek Digital, as well as MetaPlanet, that went public a couple of months back. But with further ado, let's bring in Mark and get started. How's it going, sir?
Hey, it's going great. It's going great. Thank you for the kind intro, and it's great. It's great to be back. One lot to catch up on. Exciting times in the digital asset space. Bitcoin is on a tear. Not necessarily just price. It's not number go up every day. I mean, there's volatility. And as Michael says, volatility is vitality. That's what creates the opportunity. One of the things that I find interesting is maybe many, but lots of people underperform long-term as investors because of one really simple idea, which is they fear volatility.
Yeah.
Right? They fear price fluctuation, and therefore they don't act. And by not acting, you stay too conservatively postured, and inflation chews up your return, and you get less rich. And what's really interesting about that is volatility is not a negative, right? It's not evil. What it is, it's a measure essentially of uncertainty about the future. So think about it. If you buy a bond, let's say you buy a T-bill, 90 days, with pretty good certainty that you're going to get paid because the governments don't default on T-bills. So because there's no certainty, there's no volatility. The price just stays the same and you get paid. Bonds have a little more volatility, so they get a little higher return, and then equities have more volatility. And then if you think about building a portfolio, you actually want to embrace volatility. In fact, I have a shirt that says "Embrace Volatility" with Bitcoin on it. And what's interesting about Bitcoin in particular as a portfolio diversifier is it's highly volatile because there's a lot of uncertainty across the masses on the future, right? Yesterday I retweeted something that said, Bitcoin going to zero since 2009.
Correct.
Right? There are people that still believe. It's hard for me to fathom, actually. There's people still believe to this day that, it's Ponzi scheme, it's fad, it's going back to zero. Well, it's never going to zero for lots of different reasons.
No.
And the likelihood is this volatility that has been around 80-ish, which, by the way, is the same as Amazon stock, which we can come back to at some point, is probably going to decline over time as more people become convinced that this is the future of money. But the best thing about it is volatility is one measure of an asset in your portfolio, but another is correlation to the other assets. If you think about it, if I own bonds, super risky strategy, actually. Oh, no, Mark, there's no volatility. Well, right. But then you get chewed up by inflation, so you get less rich. That's pretty risky.
Correct.
So if I had equities, which on the surface seem riskier because they have higher volatility, but they're uncorrelated to bonds, the risk of my portfolio actually goes down. That's what Markowitz, won the Nobel Prize for. And when you add Bitcoin, which is highly volatile, but uncorrelated to bonds and uncorrelated to stocks, it's 0.0 correlated to bonds and 0.15 correlated to stocks, your whole portfolio volatility actually goes down. And no, that's not possible. What is? Now, that doesn't mean every day, every minute, but over the long term, if you add Bitcoin to a portfolio, your volatility overall goes down and your long-term compounding goes up. So that says people are adding it, and now you're seeing this relentless accumulation.
Correct.
By institutions, by individuals, by these Bitcoin Treasury companies. So lots going on.
I've been investing. I don't want to say investing. I've been allocating towards Bitcoin since 2014. So I've seen some shit, all things considered, in the
Yeah,
space. Not an OG Bitcoiner, but I've seen ebbs and flows and cycles.
yeah,
One thing that's happened since we last spoke was it's been heavily. I want to say it's been heavily institutionalized, but it's been
yeah,
institutionalized.
yeah,
You've got the ETFs that are gobbling it up.
yep,
BlackRock's adopted it. You have
yep.
Bitcoin Treasury companies that are adopting it. Do you think that the way that the Bitcoin ecosystem is shaping up, that it's curbing that volatility? Because a lot of the entities that I just mentioned, Bitcoin Treasury companies, BlackRock, the ETF holders, they're piling it into 401ks and retirement funds. Those assets don't necessarily trade per se. They more so get
100%.
allocated and they stay fixed.
Yep. No, it's a great insight, and it should be true.
Yeah.
But there's a little other nuance, a little other issue that's actually counteracting against that, which is, yes, institutions are here, and yes, the ETFs are buying and hodling, and yes, some hedge funds are buying and hodling, and yes, some Bitcoin treasury companies are buying and hodling. But alongside of that maturation of the market or institutionalization of the market, you've had the development of other derivatives. So
Yeah.
now we have
Got it.
futures and we have options. And when the financialization of a commodity, now this is one of the be careful what you ask for things.
Yeah.
Remember the whole argument about, oh, Bitcoin's not a security. And we love that they called it a commodity. Do you? Think
Not
about
really.
it. Why do you want it to be a commodity? Oh, because it's taxed better, and then it won't be crushed by the SEC. Okay, but think about it. Commodities, okay, like gold, wheat, corn, oil, do they have high volatility or low volatility? Well, they kind of have high volatility. And can
Yeah.
those markets be manipulated by the big
Paper
institutions? Think
products.
about
They
gold.
have been. Yeah.
Gold has been manipulated. And I love the fact JP Morgan got caught,
Hmm.
right? Red-handed, caught manipulating the gold market, paid a billion, well, it's 960 million. So almost $1 billion fine. And they're like, without admitting wrongdoing. I love that part.
Correct.
Didn't do anything wrong, but we're paying this $1 billion fine. And the guy said, well, look, it's just a cost of doing business. We made 20 billion. We pay one. That's not
It's a good
bad.
business.
5%. Now,
Yeah.
you shouldn't have been doing that. That's against the law, but they do, and they get away with it. And so the same thing happened. And it's not really talked about, but in 2017, Leo Melamed, who's the chairman or president, I can't remember, of Chicago Mercantile Exchange, made a very interesting comment
Hmm.
that he said, oh, we'll tame Bitcoin. Like tame,
Yeah.
that's an interesting word, right? Why does it need to be tamed? And who are you to tame it? Well, if you go back to 2018, the price went from 10,000 to 20,000 in about 6 weeks post Thanksgiving into the second week of December. And then it crashed, right? We went in a
Hmm.
big crash, and by middle of 2019, it was all the way down at 3,200, or end of 2019, down to 3,200. Well, interestingly, literally on the day, December 18th of the peak, the CME issued new futures.
Yeah.
Well, what does that mean? Well, a future allows a big institution to go naked short. Now, you're not supposed to do that, but again, rules are for other people, not the institutions. And so
Correct.
they can go naked short and put pressure, because if you're an institution and you want to buy something, you don't tell everybody how great it is. You tell everyone how it sucks and how you hate it. And then
Yeah.
you sell it in the futures market and you push the price down so you can go accumulate at a lower price. I mean, the big hedge fund guys used to do this all the time. Julian Robertson, George Soros, when
Hmm.
they would love something, they would tell their guys, go tell Morgan Stanley that we hate it. In fact, go
Hmm.
short some copper so we can go buy copper at a much cheaper price. So fast forward to 2021, the price peaks again. And what happens? The CME issues more futures. So right as you get the approval of the ETFs, suddenly people can go short against the box. So I love when the 13Fs come out. Everybody's like, oh, look, Millennium owns $2 billion of Bitcoin because they own
It's the
IBIT.
cover. It's the cover their
No, they
shorts.
don't. They don't own
Yeah.
2 billion. They are short at least 2 billion, maybe even a little more sometimes, but mostly they're
Yeah.
market neutral, but they're short in the futures market. So as the futures market has evolved, that volatility that should be going down, to your point, actually keeps rising. Now,
Okay.
at some point, we'll have good balance between the haves and the people that don't have to play by the rules, and the masses will be able to thwart some of the manipulation. But at the end of the day, markets do financialize, commodity markets in particular financialize,
Yeah.
and therefore there's going to be activity in paper, not real Bitcoin, but paper Bitcoin, not real oil, but paper oil, not real corn, but paper corn. Like in the olden days, if I wanted to sell you oil, I actually had to have oil that I could
Correct.
pull out of the ground and put in barrels and send to you, and you would take delivery of it. Not anymore, right? I can write a contract that you're going to buy oil if I could actually go get some. But as long as we settle up the contract before the delivery date, I'm off the hook. And so I just made a financial transaction on a mythical commodity. So there's always method to the madness, right? There was a reason that they deemed it not a security and it's a commodity. That wasn't by accident. That wasn't so they could ignore it. It was so they could financialize it and control it, tame it, as Leo Melamed said.
So question. Obviously, when I got into crypto, the thing that I found the most alluring about it was self-sovereignty. You owned your coins,
Yep.
decentralization, like the core
Yep.
principles that were instilled in Bitcoin, Ethereum, some of the other blockchains.
Yep.
Like that's what really drew me to the industry.
Yep.
Do you feel like these paper products and the financialization of Bitcoin has kind of strayed to a certain degree from the core thesis of decentralization and self-sovereignty,
Yes. I mean,
even though it has been a net positive
no, again, it's another
for
great
many?
point. And yes, but no, in the sense that
Yeah.
there's TradFi, traditional finance. There's DeFi, which is the future, decentralized finance. But in the middle, there's this thing, rocky road, called CeFi,
Yeah.
centralized finance. And
Yep.
there's a process. So there are absolutely people who are all the way over here in DeFi. They are self-sovereign, be your own bank. They own their keys, their coins. They're on, a hard drive or whatever. I mean,
I know a
a
bunch
ledger or whatever.
of them.
And that's great. Now, we all know people lose their password, they lose their seed phrase, they have a boating accident, whatever it is. And so it's a bearer asset. Bearer assets have unique risks. And so you think about money. Think about in the old days, money was I had chickens and you had cows.
Yeah.
That was our wealth. And we would come to the market and we would trade those physical animals. And that's how we did it. It was barter. And they were like, that's stupid and it's messy. So I'm going to bring these little coins with chickens on them, and you're going to bring these coins with cows on them, and we'll trade the coins. Well, but those sacks of coins were heavy, and on the way home, the robbers came and knocked us over the head and took the coins. So we put the coins in the bank.
Yeah.
Now we have these IOUs, these pieces of paper that we could trade. Well, still on the way to trading the pieces of paper, you can still get robbed because it's a bearer asset. So then we electronified, right? We made QSIPs, ones and zeros in our bank accounts, and we would trade the QSIPs and we would trade the bank account ledger numbers. And that was a better system. But the problem was it was centralized and traditional in the sense that you put your money in the bank, it's now the bank's money. Put your money in a brokerage firm, it's now the brokerage firm's money. It's not yours. Now you have an IOU and it works most of the time, but it's not yours. You're not self-sovereign. Well, Bitcoin comes along and says, well, I can fix that. I've created this ledger, triple entry accounting. So we know exactly who owns the Bitcoin. And I can own it myself without any intermediate. That's what peer-to-peer means, right? In the old days, I want to send you money. I have to have a bank account. You have to have a bank account. I have to send you. I pay a fee. If it goes across international borders, I pay another fee to the Rothschilds, because of a treaty for like 400 years ago. It's ridiculous. I mean, it's literally ridiculous that if I send money across international borders, I have to pay one of two banks because of a treaty from hundreds of years ago. That's ridiculous. I can send Bitcoin across borders instantaneously for free using Strike, or I could send you with a couple taps on my phone Bitcoin, and it's peer-to-peer, no intermediary. Now, why does all this matter? Well, TradFi, $7 trillion of fees every year extracted from us, the owners of the wealth, for the safety, security, accounting, safekeeping, record keeping, transfer, all that stuff, which is good, and it's been good for 800 plus years. But now we have new technology that says, well, I don't need all of that. And I can save some of that 7 trillion and maybe use it for good. Well, one man's expense is another man's revenue, or woman's. So the banks are like, hell to the no. We don't like that. So we're going to tell you that, DeFi is bad and you should use our CeFi. So we'll kind of go toward DeFi. And Coinbase is this, and Kraken and other centralized exchanges. And they're great for people who don't want to deal with bare assets. I say this all the time. My dad, right, 87 years old, he doesn't hold his own keys. He has a Coinbase account. And people say, then not his keys, not his coins. He doesn't own Bitcoin. You tell my dad he doesn't own Bitcoin. He absolutely owns Bitcoin. Now, yes, it's in a different wrapper. And yes, it's, centralized, and yes, technically he's not self-sovereign, but he feels he owns Bitcoin.
He does.
Over time, people will get more comfortable with ownership and managing their seed phrases and their keys, and the UI UX will get better, and maybe we'll figure out a way to do safekeeping that's more usable. But I say this all the time, like, use my prop. My granddaughter, 2 years old, will never have one of these. Right? She'll never have a leather wallet. She'll never know what paper money is. She'll never drive a car either, right? She'll ride in the car, and the car will pay the charging station. She won't think about it. We get out of our car, we take a plastic card and we put it in a machine to make a payment. Really?
It's very inefficient.
Come on. And so all of that's going to go away. And so but it's a transition. It's not going to happen like a light switch. It's not going to happen overnight. And so, yes, young people who became educated on the technology and are comfortable with holding their keys and their coins are totally self-sovereign. Now, are they totally self-sovereign? Do they have 100% of their assets in Bitcoin? Probably not. Not very many. I ask people all the time. They piss on me. They're like, "Oh, you're such a shit coiner." I'm like, "What are you talking about? I own way more Bitcoin than most people." And they're like that, and that's not a brag. It's just a fact, because I've been around. And they're like, "But you own some Solana." I'm like, "Yeah, I do, and I made a lot of money on it, and I'm really happy about that." And like, "Well, that makes you a shitcoiner." I'm like, "No, it just makes me a technology maximalist, and I'm willing to invest in things and try them out." And I do believe that smart contracts will play a role in the future, but I do think Bitcoin is money, and that's what I want as my base layer of money. But I do think there'll be L2s and L3s and L4s. Anyway, but all of this goes to, I ask those people, "Do you have money in the bank?" "Well, yeah, but not very much." I'm like, "Well, no, how much? Like, what percentage do you have in Bitcoin? 5, 10, 15, 20, 30. And there are some that have really high percentages, but they still use the banking system, because as great as it would be to be on a Bitcoin standard today and have everybody get paid in money that can't be debased by the government, that ain't practical.
It's not possible.
Spend it everywhere. Not everybody takes it. And so there is a transition. Now, we need to stop doing like dumb stuff, like giving your float to Starbucks. right? You load your Starbucks card. So you use your Visa card to load your Starbucks card.
Yeah.
Okay. So you're using multiple layers away from money. The money's sitting in the bank. Okay. But why would you let them draw money out of your bank account and put it on their app so they earn
Correct.
interest on it until you use it? It doesn't make any sense. Why can't I use a stable coin? Now, why is Circle up 800%? I mean, before the last couple of days, in the last couple of weeks since its IPO? Because
the future of money.
Stable coins are a really interesting development. Oh, but they're shit coins. Well, no, come on. Bitcoin has volatility. It fluctuates. If I need to pay a bill at the end of the week, I can't leave it in something that has fluctuation because I'm going to have to, it's kind of like savings versus spending. If I know I have to pay my bills at the end of the month, I don't leave that all in stocks.
Correct.
I just don't.
So
have
question.
Savings bucket, investing bucket, but I have a liquidity bucket to pay my bills.
So question around the volatility and not volatility, but around the infrastructure and stable coins.
Yeah.
Which is something I've been attracted to Ethereum as the world computer and becoming that financial layer of how we transact for a very long time now. One thing with the emergence of stable coins, and I bought into the Circle IPO, so I'm very happy, with what's going on with stable coins. But at the same time, what really gives me pause is when you have Secretary Besant and Lutnick and a lot of the guys saying, well, these stable coins are now going to be backed by T-bills, which in your prior life, I know being a macro guy, I mean, it seems as if they've figured out that the stable coins are the perfect mousetrap to soak up that foreign demand that's lacking for US T-bills. And that dovetails into a much more nuanced conversation about US debt,
nation states are not going to go down without a fight, right?
No.
You got Chamath and others saying that, we can live in a nation stateless world. Naval, I think it was Naval, not Chamath. Naval saying, we can live in this nation stateless world. Sure. There is a vision of the future where all bad money, all fiat money gets crowded out. So the reverse Gresham effect. Gresham's law says that bad money crowds out good. Think of all the shitty countries in the world. The bad money eventually crowds out the good, and the money goes to zero. And the rich people, the people at the top, get super rich. All the dictators. So reverse Gresham's law says, no, good money, Bitcoin, will crowd out all the bad. So there's a world where, well, do we need America versus Canada versus Brazil versus, Central Europe? No, not really, right? I mean, now governments, because politicians who run the governments really kind of like the job because it's a really pretty relatively easy job.
Yeah.
The pay's not great, but the graft and corruption is really great.
Very good.
So you look at all these people go into these jobs pretty poor, but they come out super rich. Like, you didn't make that on your salary. How'd you make that happen? Insider trading, graft and corruption, payola, this and that. I mean, look, is it a surprise to anyone? We drop a bunch of bombs the other day, and the companies that sold those bombs happen to have major shareholders that are a lot of senators and congressmen in certain districts.
Correct.
And then the same bombs that Iran drops, I love this part, they drop it in Qatar, but they called Qatar and said, we're going to drop the bombs here, so make sure everybody's out of the way. So now, what is that? I mean, that is money, right? Every time you drop a bomb, someone's got to manufacture it and get paid for it, and then you got to replenish it. So there's a big money game in warfare.
Oh, yeah.
Warfare and sickness, the two greatest money makers of all time, right? And we wonder why, our food is bad and all this good stuff. But my point there is simply that all of the self-sovereignty is coming, but we're not going to just snap our fingers and suddenly, we can go anywhere we want with no border checks. Hell to the no. So
no.
The U.S. is going to say, I have this spending problem because I have a bunch of politicians that can make themselves super rich by spending on projects in their own districts. It's an amazingly bad system.
Yeah.
And we don't have to balance the budget because we can just issue debt. And we've made these nations around the world dependent on us by denominating their debt in dollars. So the dollar hegemony is the world reserve currency. And so this is where you call me the OMG, the old macro guy, right? Old and macro and a guy. All three things apply. And the thing about the macro piece is, as a government finances deficit spending, it has to issue debt. And countries like Japan and European countries and the US, these Western democracies, they're really, really good at deficit spending.
Correct.
Well, what does that mean? That means they're really good at creating, it's Ponzi-nomics, literally. People call Bitcoin a Ponzi scheme. So you don't understand what a Ponzi scheme is. A Ponzi scheme is where you pay other people with the money that you're creating out of thin air or taking from others. And that's what we do, right? We buy stuff from the world and we give them pieces of paper that we can literally create out of thin air.
Mm-hmm.
And there's this really interesting cartoon, and it's China on one side and the US on the other side. And we're throwing paper. No. They're throwing paper at us and we're throwing gold at them. So they are buying gold in huge amounts with our paper because they buy stuff from us. I mean, we buy stuff from them that they manufacture. And so all of this comes back to this sound money issue, which is, yes, we could move to a place where we all have sound money, we all operate on sound money, we all exchange sound money. But what the Treasury Secretary and others, particularly Lutnick, have figured out is, because he bought 5% of Tether. Here's a crazy stat. So Circle, gone up a lot, 800%, congrats and all. So it's up a lot, right? Has like a 60-ish, maybe 55 billion-ish market cap now. 55 billion?
It's about that today.
Yeah, so 55 billion. Tether makes the same amount of money that Circle did last year every 4 days.
Yeah, it's crazy.
So if Circle's worth 55 billion, how much is Tether worth?
Yeah.
A lot. And Lutnick bought 5% of Tether. And then, interestingly, the Genius Act gets passed that makes stablecoins this big thing. Oh, and we're going to put treasuries behind it because no one's buying our treasuries anymore because we're so far in debt. It's actually kind of a cool plan. Now,
it's a genius plan. The problem is they're essentially creating a bomb, because we're not. I mean, Elon failed. The debt just keeps going up. The big beautiful bill wants to continue to escalate the deficit, and now they figured out where to silo the demand.
So it's like, remember when Trump said the first time, "I'm going to drain the swamp."
Correct.
Like, no, you're not. You're going to keep the swamp just how it is. You're going to put your own alligators in. So fine, you're going to put friendly alligators in, but you're not going to drain the swamp because the swamp makes you rich. And the only reason to go into politics is to get rich. And so this idea that somehow we were going to cut spending, bullshit. It's good talk to get votes. But at the end of the day, it was theater, kabuki theater. And a big, beautiful bill. Well, what is that? That's payola. So whoever pays the most to the big man gets the most. And so we need $4 trillion of spending. Done. How are we going to pay for it? It doesn't matter. We'll just stuff the treasuries in this thing over here and we'll keep the Ponzi-nomics going. And it all works fine until it doesn't.
Correct.
And the one relief valve, this is kind of funny thing, back to Bitcoin, right? Why does Bitcoin go up? It doesn't. It doesn't grow. It doesn't get more efficient. No, Mark, the hash power goes up. No. One Bitcoin is one Bitcoin. Just like 1 ounce of gold is 1 ounce of gold. You can't change it. You can't make it grow exponentially. It is what it is. What happens is we don't price Bitcoin in Bitcoin. We don't price gold in gold. We price them in dollars or yen or euros.
Right.
So what's happening is the money's getting worse. I mean, there's all kinds of examples. Gallon of gas. When I was growing up, a gallon of gas was 35 cents. Now it's like $4.
I
Same
remember
gallon of
growing up, and
gas.
it was never over $1.
Yeah, same gallon of
Back in
gas
the
does
90s.
the same thing. It's just the money's worse. A house. My parents bought a house for $25,000, right?
Yeah.
An average house today is almost $500,000. What? It's the same house. I mean, it's a little nicer. Doesn't have the avocado green, kitchen and a couple more bathrooms and maybe a little bigger, but it's a house. And the real problem is, like I'd say, my house here in Chapel Hill, according to Zillow, it's like doubled in the last couple of years.
Mine as well, since 2022.
And did my house grow? Did it get more efficient? No, it actually kind of wore out, right? I had some flying squirrels chew up the fascia and I had to have somebody come fix it. My trellis fell down, so the guy had to come fix it. So I had to put money in to the house. So the house ain't getting better. It's the money's getting worse. And
correct.
We've all experienced it. You go to lunch. I went to lunch by myself the other day. And I literally had, huevos con chorizo, which I love, and a water. I didn't even get a drink with tax, tip. It was like $18. And I don't live in New York. I live in Chapel Hill, North Carolina. $18 for one guy for lunch? Come on. Anyway, but that makes Bitcoin worth more because it's priced,
I was going to say,
in a depreciating asset.
So to that point, Tom Lee, Cathie Wood, Jack Mallers, we see a lot of crazy price targets put on Bitcoin, 7 figures.
Yeah.
When looking at that, one thing that none of them seem to want to talk about is the implications on the greater society if Bitcoin is to reach a 7-figure price.
Yeah, that's the painful part.
Because just looking at it pragmatically, if Bitcoin hits a 7-figure price, that means that a cheeseburger is $50, potentially, or that the the US has gone the way of Argentina.
$30 for a cheeseburger the other day. 50 is not out of the question at all. And look, the funny thing about that is, I agree with you that those people and well, a couple things. Talk in your own book. If you own a bunch of something, you're going to say you want the price to go up, right? That's what we want. Once you own it, remember when you're trying to buy it, you push the price down. Then once you buy it, you try to talk the price up. Mm-hmm. Now the math to me is actually pretty simple. The power law of Bitcoin has been that we add a zero every halving.
Okay.
So we started at 10, went to 100, went to 1,000, went to 10,000. This time it's 100,000. Next time it's 1 million. Okay. So in 2028, 29, $1 million, pretty likely. And that's a 10 times increase according to the power law in the total market cap over a 4-year cycle. Okay. And that works. To your point, by then a cheeseburger pay $50 will cost $50. But the thing about money and money illusion and this inflation, right? From 1776, start of the Republic. Remember, we're not a democracy, we're a republic. Mm-hmm. We are a republic, but no one talks about that. So a republic is different. And the republic from 1776 to 1913, $1 was worth $1.
Yeah.
There was no inflation. There was no income tax. Okay. Everything was funded. The government, which is very small, mostly volunteer, very small, was funded by tariffs. It's real, right? And then in 1913, tariffs pretty much vanished in the late 1800s because they were a horrible idea. They tried them in 1828, caused a depression. Tried them again in 1930, caused another depression. So we probably hadn't talked about tariffs for a long time. But tariffs went away because we didn't need them because now we had income tax. Now, the income tax is supposed to be temporary to fund a single war, and then it stuck around because once you get revenue as a politician, you like it. So we funded the government with income tax instead of tariffs, and we didn't talk about tariffs. And since 1913, that dollar, okay, because of this myth that inflation is somehow good for you, so this 2% inflation target, on what planet is taking half of my purchasing power away every 30 years good for me? Well, it's not good for me. It's good for the people at the tippy top. I say the all-seeing eye. The people at the tippy top who own assets, real estate, leveraged businesses, stocks, those things go up. Like here's a crazy stat. Stocks, close to all-time highs, right? In gold, they're the same price as 1996.
Oh, yeah.
If you price in dollars, they're at all-time highs because the dollar doesn't buy as much stuff. And so you see it in minimum wage has to rise. And to your point, society should collapse if everybody has to pay. But society adjusts. Wages do rise. Okay. Now, do people's lives get so much better at the bottom? That line kind of looks like this. It kind of status quo, quality of life is kind of okay. Now people have to work 2 jobs instead of 1, and mom and dad both have to work instead of mom staying home with the kids. So it's less good, but it's bearable. At the top, oh my God, you love inflation. You love inflation because you, on paper, are getting super rich. And once you have enough to cover the essentials, all the other stuff is gravy. And there's this famous, we just had graduation everywhere, and there's this famous speech that was attributed to Kurt Vonnegut. He actually didn't give it. It was actually this writer in the Chicago Sun-Times. And he did deliver it, but he took it from the Chicago Sun-Times. And it was called Wear Sunscreen. So here's my advice to graduates. Number one, wear sunscreen, which is a horrible idea. It's poison. Don't wear sunscreen. Just go out in the sun and get tan. But it had a bunch of other things you should do. And one of the lines was, when we're older, we'll all reminisce about how prices were reasonable when we were young.
Yeah.
Right? I feel like prices were reasonable when I was a kid. Coke was 25 cents. Now Coke's $4. But the people today will only know Coke is $4. And so when it's $12 later, they'll be, $4 was a bargain.
It's wild. And you see it in real estate. Like when I was growing up, like $1 million house, if you had $1 million house, you were rich.
Oh, absolutely.
Your dad was making well in 6 figures. You were going to private school, $1 million house in the 90s to even the early 2000s.
Yeah. Absolutely.
You were rich. Now all of my friends are like, $1 million house is like a starter house.
And if you're in Toronto, it's a shack. Literally, it's a shack.
I mean, in South Florida, it's pretty much like the going rate.
There's a great meme. Her name's like Lena Seychelles. I can never pronounce her last name, but her first name's Lena. She's a Bitcoin artist. People have seen her. She makes these cartoons, and she has this great one. It says, in 2009, it shows TradFi or millionaire and a Bitcoiner. So the millionaire's got a mansion and a Lambo, and the Bitcoiner's homeless. And then by 2015, the millionaire's got a nice house and a car, and the Bitcoiner's got a shack. And then by 2025, the Bitcoiner's got a mansion and the millionaire's got a shack. And by 2035, it's a picture of a castle. And this one girl's whispering, can you believe he has a whole Bitcoin?
Yeah.
And that's the difference, right? Back in 2009, you needed thousands, tens of thousands, maybe even hundreds of thousands of Bitcoin to buy a house. Today, that average house, 5 Bitcoin.
Yeah.
5. And that's pretty amazing. And in the future, a Bitcoin probably will buy you multiple homes.
Yeah.
Or maybe a very nice home. And so ultimately, Bitcoin is simply a measure of the fiat fiasco, as I call it, right? Fiat is a bad plan. It's really good for politicians, really bad for the masses. And look, we all know the story, bread and circuses, right? If you keep people fed, right? So you make junk food affordable and keep people fed, and circuses, right? You have enough entertainment, sports,
Plenty of that
etc.
on the news.
Right? If you keep those two things, then you won't get revolt. If those
Yeah.
two things go away, then maybe people get unhappy. But as
Yeah.
long as you got bread and circuses, and that's been true for thousands of years, because that's a quote. I love it. That's a
From the
quote
Romans,
from the
isn't it?
Romans, right? Bread
Yeah.
and circuses. The other quote I love from Roman time is the guy was complaining that this new technology was making our memories less good, and that we weren't going to, remember things. It was Socrates talking about writing.
Okay.
Think about that, right? Because before writing, you had to memorize your family history. You had to memorize stories. You had to memorize. And he's saying, oh, this writing that we can write stuff down is going to make us weak and make us soft. Oh, just like what they're saying about AI.
Correct.
No, what happens is the tools that are less valuable become less important.
Mm-hmm.
Think about survival. The definition of advancement in survival is spending less time. Advancement in society is spending less time on survival.
Mm-hmm.
100 years ago, you had to hunt your own food, you had to cut your own firewood, and you spent most of your day surviving.
Correct.
There were no grocery stores. You didn't have, natural gas pumped into your house to turn on the heater. So I would not like to go back to that. I don't want to hunt my own food. I don't want to chop my own firewood. I like having better society. And so tools, I could calculate 3,746 times 25. I could do that. I don't like to. So I like my calculator or my computer. I could go to the library and get 20 books and take them and hope that they were there, that someone else didn't check them out, and do my research that way. Or I could use this thing called the internet. So I like technological advancement. It's a good thing. And the advancement of money is just that, right? It's a technological evolution that and we won't appreciate it in real time the way we'll appreciate it looking back. And 2009, will go down as one of, was it top 5, top 10, whatever, advancements technologically this millennia.
Yeah.
And it's a big statement, but it's true in the sense that as we went from the analog, where I talk about you and I meet and we traded stuff, to electronic, where we had banks and brokerages, insurance companies, to digital, where we disintermediate all of that infrastructure and we free up more time. Like Jimmy's song. I don't know if you've ever talked to Jimmy or seen any of his stuff, but Jimmy's song's just great. He wears cowboy hat all the time and he's this great philosopher king. And he says something, and it's a little politically charged, and people get up. He's like, if you get paid in fiat, you're a slave. You can't say that word. I'm like, yeah, you can. And it's true. Well, what do you mean it's true? Well, if someone gives you something that then they can take back right away through inflation.
Yeah.
You
and then tax it to hell.
Slave
and
to
then
the
tax
debt
it to hell on every
system.
single time you use it. Yeah.
If you get paid in Bitcoin, you're no longer a slave because your money, if you do nothing, will actually appreciate as that fiat devalues. So what does that do? It actually gives you back some of your time.
Mm-hmm.
Because the time that you would have to spend to replace that money that's being stolen, and just this cool experience. I'm at a Bitcoin meetup here in Durham, and there's a bartender who does these regularly, and she had a chip jar, and she came over. It was kind of early in the night, and she's like, "What are you guys talking about?" I'm talking about Bitcoin. She says, "Well, explain it to me." She says, "Well, last time you were here last month, and you got paid tips, all that cash that you got. Today, it's worth about 3 or 4% less.
Yeah.
If we had tipped you in Bitcoin, it'd be worth about 10% more." mean, literally her eyes, like, she's like,
So
I
if
could
you
work
tell
less
that,
hours. I could do more stuff. I could free up. And this is the cool part. What happens then is you free up, and this is Jimmy's, I'm stealing it from him.
Mhm.
You free up the greatest power in the universe, which is human creativity.
yeah,
Because if you don't have to work all the time to replenish what's being stolen from you, and you can spend some time being creative, thinking big thoughts, it's kind of cool. And
but that's also the argument for AI, where people are like, well, AI
sure,
is going to take people's jobs. It's no, AI is going to start to eat into remedial tasks
of
to where you're
course,
going to have
of
time to think in
course,
other
every
realms.
technological innovation
Yeah,
has destroyed jobs.
yeah,
Every single one. But here's a fact. We have more jobs today than any time in human history.
correct.
True fact.
And we're going to continue to have more
And
jobs.
we'll continue to have more jobs
Yeah,
because I always use Amazon. Amazon didn't exist 28 years ago. Didn't exist. Company didn't exist. Today, they employ almost 6 million people.
Amazon is as far as I'm concerned, you want to talk about the iPhone, you want to talk about Bitcoin. Amazon is one of, if not the best invention
Sure.
in the last 2 decades. If I need anything, I have a button on my phone to where I can hit
Absolutely.
it, and that thing is here within 6 hours.
Now, and the
I don't have to
best
leave
part
my
of it,
house. Yeah,
it's a perfect use of AI,
it is.
right? Because it learns from your activity. It
Mhm.
suggests things that you actually need.
Yeah,
And it's like Pandora. Pandora is a great use of AI. Pandora,
yeah,
I say, I want to hear Kenny Chesney. It plays me a Kenny Chesney song. Then it plays me 3 other songs that it thinks are kind of like Kenny Chesney that I might like. And I've discovered more
yeah,
new music that way and then it looks at other people my age that also want to listen to Kenny Chesney. What do they listen to? And it's using all of this information, this data to make good. Now, there are plenty of bad use cases of AI. I
yeah.
mean, and look, there's a problem in that if you do a chat GPT query,
Mhm.
you use a massive amount of electricity today
Yeah,
because the system is it's brute forcing stuff and it's just very inefficient. Here's one of the most amazing stats. So our brain
I yeah, I've
functions
seen
on
it.
20 watts of power,
Mhm.
24/7, 365, however many years you live, 20 watts of power. You can't even turn on Chat GPT for 20 watts, right?
Correct.
So wait a minute. So if your brain is thinking with 20 watts, what is AI doing? It's brute forcing calculations and probabilities. And it's a good tool and I
Yeah, it's
like
great.
it, but it isn't thinking. And so this idea, oh, it's going to be AGI and it's going to be, sentient. No, because it doesn't process the way the brain act. Like you told me before we got on air that here's things we're going to talk about. But my brain heard that, but it had other stuff that it wanted to interject. And then, there are things that happen in real time that
Mhm.
cause you to think of something else. And the miracle of that, and it's happening like this. Like I didn't have to sit
Yeah,
here and think for 5 minutes. Like I love when you watch the LLM and it does a word and then it does a little jiggle and then does another word and a little jiggle.
yeah,
I'm like, oh my God, that'd be like if I said jiggle, 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 word, jiggle. I mean, it'd
correct.
be so frustrating, but we're used to it in hard tech. But simple example, training an AI model versus inference, right? Decision making.
Mhm.
If you and I read a book and it takes you a day and it takes me a week, okay, so you have an advantage. You had the information for 6 days longer than I did, but there's not really a huge difference.
Yeah,
If we need to make a decision standing on a street corner of a busy street to cross the street, it better be instantaneous.
yeah,
Okay. I can't wait a week because I got to get across the street and I
yeah.
better make the right decision or I'm going to get hit by a car. So inference is really hard, and it takes a lot more
It takes more compute.
Yeah.
Yeah, correct. It's always blown my mind. I'm sitting here thinking about AI, thinking about capex spend from like the Mag 7 as like an investment thesis, and then I'm like, they're investing billions and billions of dollars in hard infrastructure and power, talking about nuclear to do what a 7 pound sack of organic matter does
Yeah, for
within our
20 watts.
heads.
And the crazier
Yeah,
part about that, the crazy part about that is it's like the Iron Man, scene where the bad guy, Jeff Bridges, is saying, to this, what do you mean you can't make the arc reactor? Um, Tony
I
Stark
know
built
exactly what.
one
Yeah,
in a cave with spare parts. And,
yeah,
you have millions of dollars and all this research. It's like, yeah, I'm not Tony Stark, right? And
correct.
that's the point, in that the computing that's necessary to do all this brute forcing, when it's not available,
Hmm.
creativity, right? DeepSeek,
Yeah,
guys in China, you can't have these chips. Okay, we'll write some software that uses the input. Like we'll start with these other LLMs, and we'll take the output, and then we'll use that as our base layer, so we don't have to use as much compute.
but that's
And
good
everybody's like,
because it forces innovation, which is
"Oh
what
my
crypto is
god,
doing to the financial system.
yeah!" And so
Completely.
all of innovation comes from resource constraints, right?
Correct.
When you have everything at your fingertips, unlimited money, like, what I don't understand, who's putting money into companies at these crazy valuations with no prospect of them making money? Like, it's not like
We,
in the
we,
Google days, they're like, oh, they don't make any money, or Facebook, they don't make any money. It's because they hadn't turned on monetization yet.
correct.
I am not sure. Maybe that's the model. Maybe as LLMs replace search, that maybe they'll ruin them by putting ads. Like, the reason I never use search is the
Yeah,
first things used to be 2, and then it was 4, and then it was 8, and then it was the first page. They're sponsored and they're useless.
correct.
I want you to give me what I'm searching for. With an LLM now, because we've fixed most of the hallucinations, I actually get reasonably good
Oh
responses.
yeah,
It's not perfect, but it's better than search. So I rarely use search. But if they start putting ads in my LLM, I might not like it.
honestly, I'm sitting here kind of squirming at the thought of it. If they start inserting ads and any sort of BS into the LLM, because it's a great workflow to be able to get in there, start prompting, and then just keep refining what you're doing and
Yeah.
work in it. If they start clouding it with that, I will be the first person to pay for the ad free model
Yeah. Well, and
right away
also, the
to
thing I hate
circumvent that.
about search is you can pay to move your result,
Yes,
but
and
that's not
even
the
if it's
best
not the
result.
best,
It's the result
correct.
that's getting paid. Adding what I want. I want results, right? I don't
Correct.
want your influence. And that's true of
Yeah,
most things in life. I want free markets. I want open markets. I don't want paid for markets.
absolutely. So you had mentioned Bitcoin as or Bitcoin and crypto as, let's say, the evolution of money.
Yeah.
One thing, to an extent, one thing that has been popular, let's say, over the last year or so, has been companies shifting to a Bitcoin Treasury
Yeah.
strategy.
Yeah.
You're an independent director on MetaPlanet.
Yep.
MetaPlanet's publicly traded. I've been following that stock for some time now, and I know that you had just started that project the last time we spoke. As far as Bitcoin Treasury management strategies, do you see that as the evolution of corporations in terms of the way that they manage their balance sheets internally to capture the power law of Bitcoin as far as their capital preservation, especially in like the
Yeah,
environment
look, I mean,
today?
it's a long conversation that's just getting started. So,
Yeah.
the original impetus was, Michael Saylor. And I love it.
Mhm.
When you can be known by your first name, it's a pretty good thing.
Yeah.
You're kind of reaching godlike status, right? Say Michael. It used to be Michael Jordan. Now it's Michael Saylor. But Elvis, kind of same thing, right? So that's great. You can be known by your first name. But Michael said, I have this kind of dying software business. I have cash, but my cash is getting devalued every single day. So I'm going to swap as a fiduciary that devaluing asset for an appreciating asset, Bitcoin. And he's like, no, that's stupid. I go, no, that's actually genius. But then he evolved, right, the idea from just preservation of wealth to, well, wait a second. If I can borrow essentially for free, right, zero coupon bonds, and buy this appreciating asset, well, that's better. So now I have a leveraged exposure to this great appreciating asset. Okay, so that's good. Oh, now wait a minute. Now my stock trades at a premium to my underlying NAV, so I can issue new shares at $2 and buy $2 of Bitcoin on a dollar base. That's like $1 of arbitrage. I mean, that's pure arbitrage. Yeah. So then it became an engine, a flywheel, and he is the master, right? And he has created, what I think will be one of the most valuable companies in the world. But he doesn't do anything. He just issues stock and buys Bitcoin. I'm like, well, correct. Okay, but as long as people are willing to pay $2 for $1, I would do that too, because I can buy $2 of Bitcoin and make a free dollar. That's a pretty good strategy. And if I'm doing that for shareholders, that's really good. So he evolved from just doing a better job with my cash management to just doing a better job with levering my balance sheet to, hey, this flywheel. Now he's redefining asset-backed securities with Strike and Strife and Stride, where he's basically saying, well, I can have a preferred stock or convertible bond on my business, but my business isn't a bunch of depreciating trucks that you don't know how many miles are on them backing it. It's actual Bitcoin, which goes up I mean, I can hear him in my ear when I'm saying this. So he's redefining the capital structure of an efficient 21st century business. Okay, pretty cool. So then other people like Simon at MetaPlanet, and I'm a board member there and an early investor and super happy. And I've also invested in some others like Nakamoto, and I just invested in Pomp's new deal, ProCap. And so I like the fact that protecting assets from the ravages of inflation, most companies should be doing that. And I think increasingly more are, hundreds, ultimately thousands, but today hundreds. But that's a little different than a Bitcoin Treasury company. Bitcoin Treasury company says, well, my core business is not that great, so I can just switch to a core business of accumulating this asset. And as long as I have this premium to NAV, I can have a flywheel effect. And now, can everybody do that? No. Can a lot more? And could there be one? Part of Nakamoto's mission is to create the equivalent in every market. So there's 80 major markets around the world. They'd like to have 80 of these types of companies, and there's probably needs to be one, maybe two dominant Bitcoin Treasury companies per market. Kind of like there's one Berkshire Hathaway per market. So then you've got the whole development of, well, wait a minute, Pomp and ProCap. And interestingly here, and MetaPlanet started this, and the 21 Capital, Jack Mahler's new business with Cantor is kind of talking about this, but ProCap has really talked about it on TV the other day, is, hey, we want to create Bitcoin-based, Bitcoin-denominated financial services. Like, maybe you should do all your savings in Bitcoin. Maybe you should have money markets in Bitcoin. Maybe you should, issue equities backed by, denominated in Bitcoin instead of dollars or yen or euros, and not euro bonds, but Bitcoin bonds. Or maybe there should be derivative markets that are more broad. So thinking about a digital age financial services company
Mm-hmm.
is interesting. And so,
Yeah.
there's a long way to go in that. And I said, MicroStrategy is number one, and they're far in the lead, and they are the model. But following on their coattails, Michael had a great line the other day. He's like, all right, so, he acknowledged that MetaPlanet went from 9 to 8, past Coinbase, and went to 8th in terms of holders. And he says, all right, when they get to 2, then it's a horse race. And I'm like,
Okay.
oh, we're coming for you. I mean, that's definitely the goal, is to be the second largest. Because to catch Saylor, probably not going to happen.
So do you think, but the implications of, and I listened to the interview yesterday on what Pomp was saying on ProCap, with not only being a Bitcoin Treasury or Bitcoin Treasury strategy business, but he wanted to create, let's call it the picks and shovels around Bitcoin to be able to be generating revenue based off the reserves. Do you think Bitcoin is there currently? I mean, we've seen Lightning,
Sure.
we've seen stables. I mean, the network is not there in terms of TPS with, let's say, like a Solana or an Ethereum that you can
Okay.
actually
No. Okay.
transact.
Great question.
Because
Well,
what
no,
Pomp was
it's
alluding
not.
to has greater implications than what I think the system can handle currently.
So it's definitely not there as the transaction rails,
Mhm.
because again, you can be fast or secure. Pick one. If you're super
Correct.
fast, you're going to be less secure. If you're super secure, you're going to be less fast. And so it's like the old days of building a house: good, fast, and cheap. Pick two.
Hmm.
So the key here is that Bitcoin definitely has some disadvantages relative to stablecoins, in terms of volatility and relative to other payment rails. Um, but there is a world where Bitcoin is a base layer,
Yeah.
and you build L2s and L3s and L4s on top. Think about the money, right? Gold is money. It's
Hmm.
the base layer. Then there's Fedwire on top of that. Then there's
Yeah.
ACH on top of that. Then there's Visa, MasterCard on top of that. Okay, that's a layered
The full
monetary
stack. Yeah.
system. No one carries gold in their pocket, not no one, but almost no one.
No.
And so, but that's the base layer of your money. And we don't touch Fedwire. We touch ACH occasionally, and mostly we touch Visa and MasterCard and maybe some physical cash. So that's money. Same thing in Bitcoin. Bitcoin could, over time, be the base layer, replacing
Yeah.
gold. And then we have, and it's probably not Lightning per se, it's Lightning like, but we need
Hmm.
something that scales. And then that could be like Fedwire and then ACH. But, and Strike is a good example of using the Bitcoin rail to transfer money from one currency to another. But it has even in a fraction of a second, you could have price movement. So maybe stables would be a better use case for that. But there are lots of ways to improve the current financial system and take out costs. And
Yeah.
so all of that is good. And for me, it all kind of comes down to proof of work. If
Yeah.
I have something of super high value digitally, I kind of want it on the Bitcoin blockchain. I don't
Yeah.
want it on an AWS server with a pointer to another chain, because AWS could say, "Oh, sorry, not yours anymore. You can't have it." That bugs me. So if I have something that's mine and it's on the Bitcoin blockchain, then I feel really secure because of proof of work that it's mine and then I own it. So that's the one thing that Bitcoin needs to develop, but we do have derivative markets. You
Yeah.
can generate income by selling options, right?
Hmm.
I love the stat. 85% of options expire worthless.
Correct.
Meaning, if you ever want to buy a call, you should stop and buy a put. If you ever want to buy a put, you should stop and buy a call, because 85% of the time you're going to be wrong. And so you
Yeah.
flip those odds, 85% of the time you're going to be right. Still not 100. The people who make money are the people writing the calls. So the reason Citadel is
Hmm.
so valuable, one of the reasons, is they control the options market in traditional finance. So writing options premium is a way to leverage your Bitcoin treasury. That's one way. The other is to provide other forms of collateralized, lending or borrowing. And people go, oh, that's rehypothecation. That's the bank. I'm like, yeah. But remember, if the purpose of Bitcoin is simply to put it on a hard drive and bury it in your backyard, we can just all go home because we have that. That's gold.
Correct.
And gold is
Yeah.
better for burying in the backyard. So I actually believe we will go back to the future, right? We had Celsius and BlockFi and these lenders, the future financial services, and they didn't work and they got blown up. Bad people did some bad things, and a couple of them are in jail, and that's good because we need the bad people to go to jail. Unlike global financial crisis, where no one went to jail. That's crazy.
I was gonna say it's funny that the bad actors in crypto go to jail, but the bad actors in TradFi somehow always stay out of handcuffs.
No, because it's who you know, right? It's who you know.
So,
and what
question.
From the cannabis world. Think about innovation in life. It always starts at the fringe, right?
Yeah.
You're
absolutely.
Relegated to the fringe. Right, the first users of pagers were drug dealers, and the first internet users were porn, and you wanted to do banking in cannabis, you can't, so you had to use crypto, and so you're pushed out to the fringe, and then it becomes mainstream over time. But when you're fringe, you don't have any friends. When you're central, you got friends, so they keep you out of jail.
Correct.
But the point there is that. I do believe we'll get to a point where there will be, centralized decentralization. So that CeFi, and Coinbase is an example, right? They're going to become a financial services company of the future. And I always thought that strategy, when they changed from MicroStrategy to strategy with the B, and the B is a Bitcoin, but it kind of looks like the beginning of Strategy Bank.
Yeah.
And he claims, no, we're not going to become a bank. I'm like, well, okay, just become a financial services company, not a bank, because bank is a bad word. And maybe we want to abolish the word bank, right? It's had a good 838-year run. Maybe it's time to move on to some new word for digital financial services.
So with the architecture that you had alluded to with gold, FedWire, ACH, Swift is in there somewhere, and then obviously
Swift is how you move the stuff across.
So that middleware in that equation, obviously you've got gold. We'll call that a commodity. Visa, MasterCard, privatized to a certain extent. Then you've got the FedWire middleware.
They're just databases.
Yeah. But then you've got FedWire and then ACH, which I would say FedWire is backed by a nation state, being the United States of America. ACH. I mean, the financial institutions are essentially all backed by the Fed, which will say they have some sort of nation state influence within. Do you think that it's going to take influence from, let's say, nation states to get Bitcoin into that sort of structure to where it is transactable and liquid to that point?
Great question. No, they're going to fight it. The nation states are going to fight it
100%.
But they're going to lose because ultimately the core, which is Bitcoin, will evolve and crowd out. Remember that reverse Gresham's law? It'll crowd out all that nonsense.
Okay.
And we, right, the smart ones over time will migrate. And as all time, like I have Bitcoin and other assets, but I don't have 100% of my net worth because I still function in the fiat world. So I still have a bank account here locally with Truist, and I still use fiat where I have to pay my bills. But I'm increasingly becoming on a Bitcoin standard, to your point, being sovereign. And that's because I can see a world where that is the base layer, it's digital gold. And that then we navigate what those other layers are on top. And, it could be a mixture, right? I mean, I see good use cases for things like stable coins and smart contracts. Some people, oh no, those are horrible. I don't know. I mean, I can see some useful use. I can see some use cases,
you
But
need to tokenize everything: cars, real
yeah,
estate,
exactly.
smart contracts would nix all the intermediaries,
Yeah. And again,
bring
for
costs
me,
down.
I'd rather have it on the Bitcoin blockchain than a proof of
Yeah.
stake blockchain personally, but that's me. But that doesn't exist yet. But maybe it's a merger, maybe it's a leapfrog.
Hmm.
The cool thing is we're building it in real time, and we don't
Yeah.
have to have the answer yet.
But
We
there's
just
some
need to
companies
keep
out
doing.
there. There's some companies out there right now that I know they're working on smart contract. I think Arch Network is
Yeah.
working on that. Was just funded by Pantera and Multicoin
Yep.
and a couple of other VCs that's working on smart contracts on Bitcoin. I
Yep.
think they raised actually a pretty big round, like 19
Yep.
million. But one thing that we've been talking about, or not we, but the media has been talking about a lot in tech, quantum. Do
Yeah.
you think do you think that is a complete farce,
No.
and we are just and quantum is an actual threat to
Well, it's not a
Bitcoin?
threat anytime soon. I mean, it's
Yeah,
certainly a threat, but it's just the hyperbole is so funny, right?
yeah,
So before we had computers,
hmm,
the word computer meant human.
correct.
You were the computer. You computed things. And so then in the 1950s, we invented mainframe computers, and there were these big giant things in buildings and vacuum tubes, and they weren't very powerful. And you could hack into them, and we've all seen movies like War Games where a little kid hacks into the Pentagon.
Yeah,
So okay, or Transformers, right? Where the guys like hacking and the FBI raids the house. So okay, um, so what happened is as computing power became more powerful, the
hmm,
physical infrastructure, SHA-256 was developed.
yeah,
Encryption. So encryption was a way to protect data from prying eyes. And so we had all different types. And remember, encryption has been going on since Babylonian times, right?
yeah,
They used encrypted messages, right? Where literally you had a decoder ring. Like when I was growing up, you got a decoder ring in your Wheaties box, and you would
hmm,
write encrypted messages, and your friend. That was encryption. But it was paper and pen and ink, and it was vulnerable because if someone could steal the decoder ring and decode your message. And in the war, right, we've all seen the movie of the big machine that the guy created to bust the German ciphers. And so now we have this SHA-256, and it's impenetrable with current computing infrastructure. So then
yeah,
people say, "Oh, but when quantum comes, it'll bust that." Okay, a couple things. One, we're far
yeah,
from quantum, right? Oh, but we have qubits. Yeah, we got a few qubits, but you need millions, probably. Maybe it's a million, but I think it's millions
hmm,
of qubits to actually have a shot at breaking SHA-256. That ain't coming anytime soon. No matter what Microsoft or Google or all these guys who claim they have, no, they have like 1,000 qubits or a couple thousand qubits. No, and their qubits are kind of stable and kind of not, but whatever. Um, but so the risk is real. So, but here's the thing: if and that's a big capital I capital F, if I did have a quantum machine, yeah, Bitcoin's worth a couple trillion, but the nuclear code's way
correct.
more. So I'm probably
Yeah,
going there first, and maybe eventually I get to Bitcoin. The problem with worrying about Bitcoin, this is the genius of it. The moment you hack Bitcoin, the value goes to zero. The reason there'll never be a 51% attack, like to do a 51% attack, think about it. You got to get 51% of all the nodes around the world. So when you got to find them, so you got to
yeah,
know where all those nodes are because it's thousands and thousands and thousands. And within 10 minutes, you got to hack them simultaneously. So you definitely need quantum. And so let's say you could find them. Unlikely. Let's say you could hack them all simultaneously. Unlikely, but let's say you could. The minute you do that, you get one block because then it goes to zero. So
yeah.
everything you stole has no value. So it's kind of a mad genius of
Oh
Satoshi
yeah,
to design it that way. So I actually don't think Bitcoin's very vulnerable. But let's say you don't agree with that. Quantum will have the same response that more powerful computers had.
Yeah, I was going to say.
We'll create new, it will be SHA 1024, whatever, I don't know, 512, whatever the next iteration of cryptography is. And there are people working on it every single day.
Mm-hmm.
And so quantum cryptography will be like traditional cryptography today. And so I just don't stress about it. Now, maybe I'm wrong to not stress about it. And maybe there'll be a quantum computer and maybe they'll steal the nuclear codes and they'll blow us all up. And but if they steal all the Bitcoin, it'll fork, my guess, and start over. Just like it did way, way, way back when, where it's like one block problem. And so anyway, that's my long-winded answer to quantum. Yes, it'll happen someday. 10 years, 15 years, I don't know, but not today. It's like the scene in Maverick, where the general's saying, your kind is extinct, Maverick. And he's like, that may be true, sir, but not today.
Yeah, that's a good point. That's a good point. Yeah, I mean, we hear quantum all the time, and it is a good point that encryption really does grow in lockstep in sophistication as compute advances. So if you were
I would be, and I'm not brave enough to do it, but I would be short all the quantum stocks here because they are stupid. I mean, Circle's valuation is high, but the quantum valuations, they're in stupid.
I'm not in any of them, but I have them all on my watch list. So I watch when they get moving, and it's amazing how they react. They're like cannabis stocks. They get a headline, they ebb, they flow.
Yeah, exactly.
They just keep rolling around and getting above their skis. But I mean, I guess in closing, I mean, we've talked about a lot of stuff, current events, the Bitcoin ecosystem. What is I guess as a closing note, what is the most interesting thing that you're seeing right now in crypto or in Bitcoin? Let's say over the next couple of quarters to a year from now, because obviously this evolves very quickly.
I really like the evolution of digital financial services, Bitcoin related financial services. I'm a big fan of what Pomp's trying to build, and we'll probably be involved in that in the future. Mm-hmm. I'm a big fan of what MetaPlanet is doing, and am involved there, and I think it's all kind of following Saylor's lead. So I really like this idea of Bitcoin based financial services. I'm a huge fan of that. In terms of other developments, I'm a big fan of something called FHE, fully homomorphic encryption, which is basically the encrypted cloud. We've all suffered from the hacks that happen at Visa or MasterCard or Target or whatever, because when your data is at rest, it's encrypted. But the moment they work on it, it's not. And that's where all the hacks happen. We've invested in some companies that have a way to keep data encrypted even when you're working on it, which kind of makes my head hurt. But fully homomorphic encryption is really super interesting to me. Photonics, we're reaching the limit at 2 nanometers where electrons just don't do the job anymore. So we've invested with some companies doing photonics because again, if you think about why your phone gets hot, right? It's because you got your memory and your processor and the electrons go back and forth. The faster they go back and forth, the more friction, the more heat. Well, photons don't generate heat. So if you could do it with photons instead of electrons, well, that's hard because photons don't go through silicon. So this kid, I call him a kid because he's young. I mean that in a loving way, not a derogatory way. He said, well, I could put liquid crystal on silicon and then it would work. And everybody's like, no, you can't do that.
Well, that's what extropic AI is working on to a certain extent
too. There are a couple companies doing that. That's
biological chips.
Yeah. I mean, that's not the one I'm talking about, but it is. And so, so there are companies like that. I mean, there's innovation in chips. I mean, there's this whole issue of inference. I'm a believer that so it's a topic for another day. So Jeffrey Hinton, father of AI, big brain, everybody trained at Google, worked under him, and now is starting all these companies like OpenAI and everything. Mm-hmm. This is a big statement, and people say, Mark, you're a freaking idiot for even saying it. But I believe they're going after the wrong thing. I, there's this guy, Carl Friston, who was across the hall from Jeffrey in London. He's a neuroscientist. Jeffrey's a computer scientist. And, Jeffrey's got this vision of AI and AGI. And Carl Friston's like, but that's not how the brain works. That goes back to the 20 watts. And so he's all about active inference. And I'm a big believer that that's how AI will evolve. So this idea of active inference and Friston-based neuroscience as opposed to brute force. Let's just do the calculations faster and use more energy. I just think that's not going to work. But, a lot of people made a lot more money than me. So, I shouldn't say stuff like that. But
I now have some reading. I now have some reading tonight because I'm actually going to look into that. I think that's
I mean, Friston's a really interesting. And look, neuroscience. I mean, we can talk about this all day, but the way the human brain works, it's unfathomable. I mean, just everything about it is unfathomable, right? And little things like think about the aha moment. The word eureka, right? In the shower. Why do you have the idea in the shower?
Correct.
Because when you're asleep, your brain's not asleep. It's actually working on that last problem. So what you should do every night, right, before you go to bed, you should give thanks, right? You should, express gratitude to calm yourself. And you should think about a couple hard problems. Yeah. And then while you're sleeping, your brain will actually work on them. And you don't always have the eureka moment every time, but sometimes you'll get that eureka moment. And that's unbelievable to me. And so little things like that, the nuance of how can I have certain things stored 50, 60 plus years that I can access instantaneously. And then I can't remember what I had for breakfast. So, but that's erasure, right? You only have so much capacity and there's certain things that are important and certain things that aren't. And the integration of, so lots, I think neuroscience is really interesting. So,
yeah, very much so.
That's probably the most interesting things I'm thinking about these days.
Well, those are definitely some interesting topics. And I mean, I've been looking into more so neuroscience with like psychedelics and how they're using it to unlock memories.
Oh man,
which it actually you can go down a huge rabbit hole.
And it's really, really interesting. And then you can go down into the rabbit holes of prior civilizations and why were they so advanced and what happened to them and who were the great thinkers of those times and why is their wisdom, like if you think about today, right? We all have these books on management and leadership and it's all from 2,600 years ago.
Correct.
Right? Seneca the Younger, Seneca the Elder, all these, I mean, these ancient wise people, because humans are going to human. And there's only so much of the human experience that's new. Right? There's nothing new in this world. And so, but there are some interesting things in the past where they challenge your mind. And one of the things with psychedelics is they say that you can get rid of the inhibitions that are trained into us by, opening up these certain pathways and come out with, and then you get into whole spirituality and different planes. And I mean,
yeah, that's where it loses me a little bit. But it's psychedelics. I think we've got a long ways to go, and it's just going to get more sound and more sound.
If aura wasn't real,
yeah,
you wouldn't meet some people and immediately like them and meet other people and immediately not like them.
Yeah.
Right? You wouldn't meet some people and say, God, they're the smartest person I've ever known. Wow. You wouldn't say, I don't know where they're going, but I'm following them.
Yeah.
Right. And
some people have it.
It's just real. And I mean, I've had that experience multiple times in my life. I'm like, I just met you. And how can I be like this attracted to you, this drawn to you and the charisma. So that all of that is interrelated, karma. I mean, all kinds of very cool stuff to think about and talk about. And that's cool. The intersection of your shows, brings a lot of this out, in that there's a place at the intersection of innovation,
Mm-hmm.
of spirituality, not religion per se, but spirituality, and future states, I guess. Willing things into being, saying things into being. And my phone does it all the time, right? Everything we talked about today is going to serve me ads all day because it was listening to. No, I'm just kidding around. But actually, I'm not kidding, but it's true.
Yeah.
But anyway, I talked too much.
With you.
I appreciate the time as always, and do it again soon.
Trust me. I greatly appreciate your time. It's been this has been a great conversation. Hope everybody that's watching it gets as much value out of it that I've gotten. And we're gonna have to bring you back to go through the psychedelics and neuroscience.
Awesome, we'll do it,
because that's something I enjoy thoroughly. But this has been great. Thank you, and I look forward to doing it again soon.
All right, happy summer.
Thanks. You too.
Hey everyone, we just eclipsed 50,000 subscribers on our YouTube channel. We want to continue to grow this community. So if you haven't done so, make sure to subscribe now. We'd appreciate it very much here at the TDR Traded Black podcast. As usual, let's keep the conversation going. So leave your comments below and we'll get back to you with any feedback that you want to learn more of. In the meantime, enjoy the rest of your day and we'll see you next time on our latest Trade to Black podcast.